Testing, testing, 1, 2, 3, testing, 1, 2, 3. Hang on, let me get over to the other chat. Well, I think I have it in here. Comment allez-vous? How are you today? Ni hao ma? Yeah, sorry about that. I had to reboot. So you can hear me okay. You can see me okay, I suppose. The chat's not working for me in my broadcasting room. Let me just see if I can fix this. Doesn't look like it. So, all right. So we'll have to do it this way. It's not broadcasting in my chat room, but you can. All right. All right. So good. Hang on. Let me rearrange my world. And while you have the disclaimer, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So good morning. Let's see how we got this all set up. All right, so this doesn't look quite right to me, but it'll have to do if it looks all right for you. So hi, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you for being here. Thank you to FX Street for hosting me for the 154th month in a row just for this webinar. But I've been working with FX Street for over 13 years. So thank you, FX Street. I love you. So thank you very much for being here. So what's going on? We got a little non-farm payrolls thing. Are we interested? Wow, some people can't hear. You should have video. You should see a full webcam. And someone else says they can't see. So I don't know what's going on. So let me. Everything's okay? Yeah, all right, cool. So, yeah, so do we care about this one? We have this talk about the Fed, the pause and raising interest rates and all that kind of stuff. Is it really that surprising that we've hit the neutral rate and the Fed stopped pausing? What is the neutral rate? It's the rate in which the Fed funds rate is equal to inflation. So it's by definition a place where the Fed should stop raising interest rates. And you know, so what's the dual mandate for the Fed? One, make sure the economy is in check, which means what? Jobs. We're at a 50-year low in joblessness. Or how about, let's say it in a positive way. I just want to say it the European way. Let's say it the other way. There are more Americans with jobs today than ever, as a percentage, of course, than in 50 years. Everyone that wants a job has a job. Okay? And if you need to hire someone, it's very, very difficult and very expensive. So, check, check. Fed did its job. Certainly wasn't the government. Oh, wait, cash for clunkers was a huge success. But they didn't save the American people from destitute. That was the Fed. All right, cool. So what's the other part of the mandate? Keep inflation in check. Well, what's the real inflation in the United States? Does anybody know that one? We have the Fed funds rate. We have like the CPI or the PCE rate. So what is the real rate in the United States of America? By the way, I hope you don't mind the fireside chat. Did you see this, by the way? The real interest rate is 0. 0. You take the nominal rate, which is your inflation level, whatever measure you have, CPI, PCE, whatever. Subtract the Fed funds rate, and it's 0. That's why it's called the neutral rate. So anyways, there isn't expected to be higher levels of inflation in the near future. So there's no reason to raise interest rates high, because if they raise it higher, then you're actually taxing the economy, if you will, slowing it down. Okay? So they say they're not even thinking about it anymore, back to data dependence and all that kind of stuff. So write this down if you need. They might raise in June. They might raise in September. They might raise in December. Okay. Do you know the way to San Jose? All right. So I'll give you some charts. So once again, thank you to FX Street for hosting us for 154th time for this one webinar. Thank you very much for being here. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. We're a boutique foreign exchange trading firm. And I'm here to woo you with my charm, but more likely with my knowledge and my experience in Forex. The overriding goal of this webinar today is not to put you into trade, but to teach you how to trade conservatively with discipline in a repeatable fashion. So I'm not interested in one-hit wonder. Non-Farm Payrolls comes out, there's huge volatility. Trade, 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 go, 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 yeah, yeah, yeah. That's not what I do. Hey, Reb says the margin at Traders Way is 1,001. You selected that, bro. So, yeah, that would be insane. 100 to 1 is more than enough. Anyways. Yeah, so anyways, I'd like to teach you conservative, repeatable methodology for trading. So we may talk about fundamentals today. We might talk about technicals like multiple time frames. We might talk about moving averages. We might talk about oscillators. We might talk about leading and lagging indicators. We might talk about scalping, about spot trading, about swing trading, about carry trading. I'm not really sure what we're going to talk about because you are the boss and I'm just a humble currency trader. So as I taught my children, I say, no, anyways, we'll keep that separate. So anyways, we have 3 hours today. So here's what I propose. I'm looking at the clock there. Here's what I propose. I cover the basic methodology and we'll prepare like, how about a euro dollar chart? Well, euro's not really moving. Pound is a little odd. We'll find something to trade. We'll set it up for the news event. And then at 8:30, the news will come out. Right? Yeah, Kevin, but what we really care about, Kevin says, do you see the government shutdown having an impact on the NFP numbers? Sure. So what we'll do is traders really use the revision anyways. Okay. But anyways, yeah, so yeah, that'll affect it. But what I was saying before is the Fed's already got this under control. We're interested now only in inflation. Okay? So today's numbers are important, but they're differently important than traditional. Okay? The Fed is more interested in inflation levels, and the market's more interested in interest rate hikes. Everybody on the planet knows we're at full employment. Okay? Yeah, Oswald says, can maybe talk about the difference between strategy and technique. Actually, the way I refer to that is strategy and tactics. So my book I wrote 11 years ago, right, is Strategic and Tactical Forex Trading. So actually, Oswald, I wrote a whole book to answer your question, but I certainly could do that. Okay. No, Reb, yo, when you opened your account, you selected that. I would never recommend anyone to have 1,000 to 1 leverage, but you need to focus on our trading and not on yourself. Thank you. All right, so cool. So anyways, we'll cover technical and fundamental analysis. We got to go through the news here. There's going to be some volatility, obviously, so we need to identify some support and resistance levels. And then in the let's say the third half of the webinar, I can leave it to Q&A. Okay. You'll be able to see these easier when I expand them. Okay, for example. So we'll cover the dollar pairs today and the yen pairs today, pretty closely. We will look at oil and gold pretty closely. We probably will dip into the Swissy pairs. Okay. Yeah, Isaac, I kind of agree with Isaac. Like, I've never really got too crazy over, I've never needed lots of leverage, and nor did I ever want lots of leverage. But it's not the leverage. Like, you could, theoretically anyways, you could have $1 million to 1 leverage. The issue is your lot size relative to your account size. Okay, so I used to have a rule of thumb. I would trade 1 mini lot for every $100,000 in cash that I had in my account. And most of you are probably trading more than 1 mini lot and probably have less than $100,000 in cash. So I don't care what the leverage number is. Relative to my lot size, I was taking very little risk. Isaac says risk 2% per trade. Now, I totally reject that. So now I would say even Isaac is extremely over-leveraged. So to me, if you lost a trade, you'd lose 2% of your account. That's a bad month. You're saying that's one bad trade. For me, that's one bad month. So I would like to lose, let's say, risk 2% over 10 or 20 trades. You see what I mean? So that's all. Now, maybe you trade less, maybe that kind of stuff. But yeah, I think we all agree, whether you call it leverage or lot size, right? Because that's what the risk is. So I think you need 1,000 to 1 if you only have $50 and you want to trade a standard lot. Then you're going to need lots of leverage, and we know that that's financial suicide, right? So like nobody, right? Okay, so Isaac, we're already jumping into it. You know what, Isaac, can you ask me that after NFP? Like, It's almost 8 o'clock now. Like, ask me about, like, let's say 9:45 or 10 o'clock, and we'll go in there. Yeah, it's possible, Ross, that over 11 years, I've refined my risk tolerance, and I'm certainly less risk tolerant than before. Okay. Yeah, Isaac, it's a great topic, but I got to set everybody up, right, to get ready for the trade. But let's totally dive into it. It's a fantastic question, Isaac. Well, there is a chart. Pavel, you don't see the chart? Yeah, well, 10 to 1 is better, but standard leverage in the financial markets is 40 or 50, right? But anyways, it also comes down to how much money do you have. Let's put it this way. If you're trading over let's say not even $1 billion. Let's say you're doing 500 million a month. You probably don't need as much leverage. Okay, I had my own dealing desk. So, yeah. So anyways, let's go. You should see euro dollar. We could start here. Euro dollar has been sideways for quite a while, so it's nice to see it kind of moving again. But all it did was go up to the next level, right? So one of the things we should do here is identify key levels of support and resistance that should play an important role after non-farm payrolls, right? So one of the things I want to do here is I always look left, right? All right. Okay, so what we want to do is identify levels of resistance and support in the future. So let me get my drawing tool here. Yeah, Reb, if that's the case, I mean, obviously that's really sad. I do not advocate that at all. I do, I do my best to prevent that. Okay? Yeah. Nobody wants that. Okay. Anyways. In fact, in many ways, my job is to prevent that. So, for example, if price spikes up, in the medium term, meaning like within an hour or something, one of these levels is likely to act as resistance. By the way, have you guys read How to Prepare for and Trade the Employment Situation Report that I wrote and published on fxstreet.com? In that, I describe the scalp and the counter trend trade, and I give a couple of tips in that article. And the overview is not just how to trade it, but also how to model the headline number. So if you want to say, well, is it going to be 253 or 268? You can figure that out. It's not that difficult. Okay? Thank you very much, moderator. Now, trading system ID says USD up or down. How would I know? The number hasn't come out yet. Okay. Oh, thank you. I appreciate that, Marina. Yes, Ashley says scalping is the way forward. Yeah, but it's not how to be successful. You can make money, but you're not going to get wealthy. Okay. So the next part is okay, if the number is good or if the number is bad. So let's say it's a high number. Let's say the headline number is 300K or higher. Okay. What does that say? That tells the Fed we're at full employment. Employment is hotter than we thought. But what does that make the Fed do? Does it change anything at the Fed? Well, I just described that the Fed's not even really interested. We know we're at full employment. Fuller employment might be interesting, but they're not really interested in the jobs. We got that taken care of. So they're going to look at like hourly earnings, for example. Right? Hourly earnings, because that will lead to inflation. Because all of that leads into the marginal propensity to consume, right? So they're really looking at this. So a headline number is not going to make the Fed really change their attitude that much, if at all. So we really care about this. All right, well, what if the number comes out a bad number? What if it comes out 180 or even less? Well, first thing, people might just discount it and say, oh, the government shutdown. Instantly discounted. So that could mute the market's response, but we don't know. But that certainly is an argument. But then, guess what? This is bad news, right? Well, it points people to think the economic data is getting so poor relative to what it used to be, the Fed cannot raise interest rates further anytime soon, not even June. That pushes us out to September. And the market goes, aha! Okay? Stocks, in that situation, on a bad number, the stock market will rally, the US dollar will fall, and then you can correlate everything out after that. Isn't that neat? Thank you, Life's a Sketch. Yeah, well, you could also pay Harvard and go. Right? No, I guess I'll pay. So anyway, so we'll see. I'm kind of rooting for a bad number. Bad, only 200,000 jobs. Let's say a modest number. I'm more rooting for a modest number than a really high number. And then we should look for, look for revisions and look for hourly earnings. A positive change in hourly earnings is the opposite. It says the Fed's going to have to raise interest rates probably by June. Stock market falls, dollar goes up, so on and so forth. So I actually want it's not a bad number. It's like people saying, the economy in China is bad, and then they follow it up by saying it's growing at 6.6%. The Chinese economy is bad, but it's growing at 6.6%. It's a little strange, right? And by the way, I heard a stat today. Louis Vuitton sales in the last quarter were up 10% in China. So like I said, it's not that China's crashing and people don't want to buy, people can't afford a $1,000 iPhone in China. No, they just don't want a stupid $1,000 iPhone. Thanks a lot, Tim Cook. Maybe, they've run out of Steve Jobs. Now what's Tim Cook going to do? Help me, Steve Jobs, help me! Yeah. So anyways, people just don't want a stupid $1,000 iPhone. So there you go. Oh, no, it's the Chinese economy. But Louis Vuitton, and by the way, I took my daughter to Louis Vuitton, and I'm amazed. These are like $10 shoes they're selling for $1,000. I'm like, these are like dollar store shoes. They've like sewn some patches to. It's amazing. But they're selling them in China. So anyways. Yeah. So I might be in China, well, Hong Kong in a week. So I'm going to go check it out. Check it out myself. So let me continue on these. Where are sort of the moderate and extreme levels of support and resistance? So we've identified the two obvious ones above us, but I want to see what's below us. And look, I've already marked it. Thank you, me. Thank you, Wayne in the past. I love Wayne in the past because he marks my support and resistance over and over and over again. Cool. So like, here's what may happen. We'll be around here, let's say, like if the news came out right now, and we're still 25 minutes away. If the news came out now, and it made the euro dollar go up, it's going to go up, 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 up. And then I would really worry around here about bulls, wait for it, selling. What? Wayne, you mean bears, don't you? No. I think around here, post non-farm payrolls, if the market goes up, it'll go up to there, and then bulls are going to start selling. What the heck does that mean? Well, anyone that scalped it or bought it down here at the bottom of the range, like, dude, even a blind man can see that, right? Now, what I wanted in this situation was a breakout pullback. So this is actually a trade I set up 3 weeks ago or something. But anyways, anyone that bought it here or scalped it off of here after the news, whether you made 100 pips, 50 pips, or 20 pips, depending on where you get in, bulls are going to want to take profit here. And which means they've already bought the trade. So to take profit, they have to sell. So it doesn't necessarily mean bears are selling, because that would bring it down hard. What's more likely to happen is the first wave, if you will, not Elliott wave, but the first red candles will be profit taking from these guys. And then you'll probably see like a double top. And if you do, that's where the bears start selling. There's a big difference between bulls selling and bears selling. And you have to learn that. Okay? So that's interesting, right? That's right. So Ross, how do you close a position if you've already bought it and it goes up, and then you tell your broker, take profit? What does your broker actually do? Enters a sell position. And it offsets you here, right? But you're still technically selling. But the concept mentally is very important. When you're identifying levels of support and resistance, and you're mentally saying to yourself, this is where bulls would sell. Okay, but you might be a bear. Well, as a bear, you need to wait for the other bears. You see what I mean? Your job as a retail Forex trader is not to outsmart the market. You're supposed to be a cork in the river of Forex. So you need to wait for the bears, is what I'm trying to say. So a bear like this, let's say this move here is profit taking, and then if you got a double top here, that's a reversal pattern. So like, just ask yourself the basics. Are you supposed to sell in an uptrend? Is that what you're supposed to do? Sell in an uptrend? The answer is no. So what do you do? Well, if you're a bear in a bullish market, you wait for a reversal pattern and then sell. So the first move here in a double top is not bears. Bears don't sell in an uptrend. Bulls sell in an uptrend. So mentally, I find it's very helpful for me to say, okay, maybe this will attract bears. This 100% move means that nobody got back in, right? So there's weakness. So maybe if bears sell this double top, I'll take a shot at the double top. And then if it makes a lower low, I'm going to take another shot at the lower high. So plan A, plan B, and now I have myself a reversing market that I played cool as a cucumber. You got it? Cool. So did you guys click the little thumbs up? I don't know if you're on YouTube or on FX Street. Cool. All right, so, all right. Let me move here. So we can take a look at, I don't know, let's look at something sort of opposite. These are daily pivots. Do you guys day trade? I love swing trading, but I love day trading. Ashley asked a great question, Ashley. Oh, Ashley, I want to do the Ned Stark thing. But now I think about your dad, you're like, you know, so I don't want to insult your dad. Yeah. Oh, thank you, David. All right. So what do you mean trend? The trend that you're trading. The time frame you're changing, right? Right, Ashley? That's funny. Anyways, I hope you didn't tell your dad. Right. But anyways, it comes down to the time frame you're on. So like if you're scalping, are you on a 4-hour chart when you pull the trigger? No. Are you on a 1-hour chart when you pull the trigger? Do you scalp on one? No. You might create trade plans and bias, but not there. 15-minute? Probably not. So like you're trading here, right? On a 5M or something, right? So on a 5M, if it's doing this and you're a bull, you still shouldn't be buying it. But if it then does this, then you have opportunities. Okay? Oh, thank you. Patrick says everyone should follow me. Thank you, Patrick. And I am wicked smart. That is true, Patrick. So thank you for that. I really appreciate it. Your loyalty and respect is important to me. So thank you. So in this case, what I'm looking at are daily pivots on a 1-hour. Trend is your friend. But you asked, like, how do you define a trend? What time frame? Well, really, it's all, right? So you can be long-term long and short-term short. Okay? So you might say, on this time frame, okay, we're bullish, or sorry, bearish. But could you be scalping in here? Well, of course. The thing is, like the way I describe it in my book from a million years ago, no, you don't have to buy my book. I'm not trying to get rich selling you books. Everyone's so sensitive. But I did write it down. my thoughts on this subject. And the way I interpreted it when I was teaching myself how to trade was it was 2 times the risk, 2 times the risk for 1/2 of the reward. Do I want it? And in my opinion, over blood, sweat, and tears, right? Okay. So when I look at this, what I told myself was this was twice the risk, 1/2 the reward, and I'm better off just selling. And in this case, I developed the methodology of trading with price action. So it's very common for me to see this low significantly lower than this low, and in fact, significantly lower than that low. So what you do using price action is you take this old roll reversal area, and that becomes your future sell zone. Okay? And I found that this is twice the risk, 1/2 the reward. This is trading with the trend, and I tend to do a lot better with the trend. And if you know how to day trade, so the way that, I'd say 90% of my day trading are setups like this that you see here, where you have a bearish engulfing daily candle, daily bearish engulfing, and then you have the swing. Okay, based on swing trading, in this case on a daily basis, this is a daily swing. It's also an Asia fade. So this is very, very typical Wayne. That's a sell. I'd sell that all day long. And the interesting thing is this green zone was the target. What an amazing coincidence, right? Da Vinci says, don't trade NFP, you lose. Yeah, I have no problem with someone saying non-farm payrolls is a high risk market to trade in, and you don't need to trade it. And I'm 100% agreeing with you. You don't need NFP to be a professional trader. It's fun and it's exciting. The data is important for macroeconomics and central banking policy and stuff, but you certainly don't need to trade it. Okay. So what should we do here as far as a trade plan? Well, I'm not going to use daily pivots on a high volatility event driven setup like we have. Okay. So let's back out here. I'm looking at a couple of things. I'm looking at the new February pivots. Okay, but I'm also looking at next week's pivots. Okay, this could be very interesting. So if the number comes out hot, a big number, or there's a big change in hourly wages higher, it's going to put the market into the idea that the Fed's going to raise in the June meeting, and they haven't priced it in because they've unpriced, right? So the 10-year T-note's back to 2.66. So they're going to have to get their dollar on, and that might take us from this weekly swing to here. And that's next week's trade plan, by the way, guys. If you're a bull, this is your buy, and this is your take profit. Okay, that's my weekly swing. We might do it in a day, however. Okay. Shoni asks about the stock indices. I'm a macro trader, so it's all the same to me. If the dollar, let's say, goes up, the bond market rallies, the stock market falls, gold does its thing. I mean, to me, I'm a big fan of Newtonian physics. So I think if one thing happens today, everything else moves like clockwork. Okay? So to me, it's all just one question. What is the number? How does this impact Fed policy? Well, in that case, Michael's very astute and says, well, then you're saying CAD would weaken, therefore oil would fall. Well, that's not what I said. I'm isolating dollars. So if this is going up, then pound dollar would be down. Euro dollar would be down. Okay? But let's say, I'll pick on Aussie. Aussie yen would be down. Okay? But that may or may not impact oil. Some people might argue that the raising of interest rates would slow down the economy and all that kind of stuff. But oil isn't necessarily sensitive that way. It's more sensitive to supply and demand as of late. Okay? No, it's just a release. There's no thing. There's no thing to watch. It's just a release. Okay. Cool. So where are the key levels of support and resistance on this one? Would you agree that this area would be interesting? I think you might. I think you might see that this level could be interesting. Let's go farther down. Let's call this area an area of interest. And this is already sort of an interesting level, but that's where we're going to start. So, for example, if the number comes out, or when the number comes out, you can scalp it, and we can do the high volatility event-driven strategy. That's not a problem. I'll help you with that. But if you find yourself down here, okay, at that price level, so it'd be a lot faster. So let me redraw it to be a little more accurate. So if it does this on a 1 minute down to this level, don't be shocked if this is a retracement, or vice versa, up and down. So we're way too far out, so I probably shouldn't do it that high. Let me find a more reasonable one. So this top would be of interest, of course. And there seems to be more resistance than there is support, but we're already at a level here. Can't really get further out without squinting. Let's see if we have an overlap. I'm going to have to play sort of this. I'm going to play this. What I'm saying is it could scalp down, hit this, and then counter trend back to about here. And then from here, probably next week, do that. So I'm thinking straight down, back, and then down again next week. So these are levels of bounce. So it's not that you enter a trade per se. You would scalp down, profit, and then look for a counter trend. But it's all been published years ago in that article that our wonderful moderator has already posted. So again, on behalf of Traders Way and FX Street, thank you very much for being here today. The loyalty and respect that you show, I really appreciate. So asking questions and getting involved is really good. We have another couple of hours. So the news is going to come out, and we're going to let the news take the candle, and then we're going to look for a pullback, and then maybe we'll scalp. So how many people attended last month? if you recall, I don't remember which direction it was, but it spiked, it pulled back right exactly where we wanted. It took off, hit our target, I think came back, took our second entry, hit our second target, and then reversed. And we had planned it out just perfect. So like, for example, let's say this is the number points to a Fed hike in June. It's going to probably come up, probably even blow through this level, and then it's going to come down like that. Okay. No, I don't open trades before NFP. That's called guessing. So thank you for attending before. Has anyone attended more than 50 non-farm payrolls with me? More than 50 months. Anybody more than 50? If you type the number you think you've attended. This is the 154th month. I've been doing this longer than probably you've had children. You're setting a buy limit.